Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday, January 31st. This will be our chart lesson for today. Couple of things, a couple of housekeeping things before we get started. In yesterday's video, you saw my news guard go off. Never fails. Whenever that happens, I get 50 emails asking about it. Where'd I get it? I can't find it. And the reason you can't find it is because it's proprietary. If it were my proprietary tool, I would give it to you for free. But it was given to me by a fellow trader that wrote it, and it's his. It belongs to him. It is proprietary. So for that reason, I can't give it out to people. So no need to ask about it. You won't be able to find it. It's not for sale. It's a guy that's a trader, that's a software guy, and he wrote it, and he shared it with me because I'm a close friend of his. So, but anyway, I just wanted to get that out of the way so people didn't have to keep sending me emails asking about it, because you will not find it out there, and I cannot send it to you. I apologize. Like I said, if it were mine, I'd give it to you for free, but he asked me not to share it. He gave it to me, and in replace of that, if you're using NinjaTrader, go to the NinjaTrader forum. There's probably 4 or 5 of those news guards that you can download that works directly on NinjaTrader. That's what I used to use, and there's nothing special about it. You can set it to go off to alert you to the news each day. And the reason you want that is especially on days like the FOMC, when the news comes out, you want to know, you want to be prepared so that you're not taking a trade just as it comes out, or you're not stuck in a trade and get surprised. And so that's all it's for. I mean, that's the only reason you need it. So it's nothing spectacular. It's nothing special. It just lets me know when the news is coming out about 5. You can set it to let you know 10 minutes, 15 minutes, whatever. So, but anyway, also just want to throw a plug out there for a couple of guys I spoke to today. I did a live interview today. I don't do a whole lot of that, but I like these guys, and they asked me to do it, so I was happy to do it for them. And I may do some more with them, too. If they invite me back, we'll see. But I enjoyed it. Just want to let you guys know, if you're listening, I enjoyed it. And just thought I'd give you a plug. I think they're posting them on their website, which is livetradecall.com. Go over there and check out their site. It's a pretty neat site. They're putting some of my videos over there, and they wanted to I think they're doing interviews with different traders. So you might find some value over there. Go over there and check it out. I think they said something about maybe even putting it on Big Mike's trading forum as well. I don't post or read those forums, but if there is one that I like, it's Big Mike's. I think that's a straight shooting forum. I think there are some good people there posting that know what they're talking about. Although I will say, anytime you're reading a forum, be careful what you listen to or what you take away, because most of the people there, and again, I'm not saying everybody, but most of the people there are not profitable traders. So they're just like you. They're trying to learn to trade, so they're looking for information, and there's a lot of bad information out there. That's all. I don't know any other way to put it than that. So you just got to be careful. So, but if there is a site that I would recommend that I like, it's Big Mike's. I think they do a really good job of keeping things straight over there. They seem to be pretty straight shooting guys, and so I like Big Mike's, and these guys, Vince and Ryan over at LiveTradeCall.com, are two pretty smart guys too, and I like them, and so I think they probably could give you some value too if you want to check their site out. Okay, let's get back to our trading, our chart lesson for today. I'm a little pressed for time today because I have to pick my daughter up. So in the video, we just did the interview. We talked for a couple hours, so I'm a little behind today based on what my schedule is. So I'm going to get through these trades. And there were quite a few trades today basically what I'm doing now. If you haven't watched the videos for a few days, I've changed the strategy up a little. I won't say I changed the strategy, but I'm changing up the process of how I do the chart lessons. I'm going to pick them up from about 7 a.m., somewhere right around there, through about lunchtime. And the reason being is I want to start trading a little bit earlier and getting done. I'm generally done by noon anyway before this, but I used to wait till the market closed before I would actually do the chart lesson. But now what I'm going to do when I get through trading, if it's before noon, I'll at least wait till noon. But my goal is to be out of here by 1 o'clock every day, and so that's why I'm doing this. No specific reason otherwise, and mainly because I like to be done by noon anyway. I'm a believer that most of your movement is in the morning from the open. Really, the market starts moving around 6 o'clock, 6:30. Sometimes as early as 5 or 5:30, but generally by 6 o'clock into the 7 o'clock hour, the market starts to move pretty good, and there's sufficient volume, so it's safe to trade then. And price action is price action, and you can see generally I set my trend lines by the overnight stuff anyway, so it's valid, and so you got to watch the open because they'll trick you. But if you're already following it prior to that and you're looking at the price action, then you got to pay attention to that. So, but anyway, let's talk about the trades. And this trend line here, let me just get rid of that. Today was a trading range day. There's no doubt this is a trading range day. You can see that. Let me scrunch it up here. It's pretty much trade. We started out in a really tight range, and we just moved into another range here. And generally, when you have a range, just call it that right there. That's going to be a little bigger, though. But you can see, generally when you have a range, this is what I would call specifically the majority of the range. And generally when you have a range, if you break out and it doesn't matter which way it breaks out. If it starts trading outside of that range, it's generally going to make another range about the same height. That should be your target. And you see this one is probably, I mean, that's it to the tick almost right there. So I would say that's, even though this is the majority of the range of spinning here, this just gives you an idea of what you should look for. And if you look at that, and you can see it did find resistance right there. It did break a little higher before it sold off. So that would have been my target right there on this breakout, right to this point right in here. And you can see that would have got you out at a very good place. You wouldn't have got all of the move, but we can't always get it all anyway. So something to think about. But let's talk about each one of the trades. Again, we opened up in this trading range, and you can see it's pretty clear. There was a long entry right here because that's a failed break lower, but that's real early this morning, and I'm really going to try to start it around the 7 o'clock hour. So let me just see what the time this bar was. And you can see that's just before the 7 o'clock hour when this bar completed. So that's close enough. We'll start right there. But there was a short right there. It's just off the high side of the range. It's obvious this is a range. That's a fairly bearish bar. It was one tick from closing on its very low. That's worth taking, especially on a tight range like that. We're probably coming to the other side. And you can see not only we come to the other side, but we went a lot lower. And remember, on a range day, you just about can fade every new high or every new low, but always wait on the right kind of bar. And because sometimes, like right here, they fail. But you got a long right here, nice long, fairly easy scalp. If you didn't take the entry right there, you had a second entry right here, and I'm not sure if because I entered right here on a limit order, that double bottom, that far away from the EMA. I entered on a limit order. It went a little further against me than I liked. It actually went, I think, a point against me. Yeah, 1 point. But generally when you enter like that, you got to give it a point or two. You got to keep your 2-point stop down there. You may not let it take the whole 2 points, but you got to keep your stop out of the way because a lot of times it'll rock it down and then reverse just like it did there. So it was a good entry entering here. And by entering here, my runners were good easily, and I was able to ride it all the way to the top. But this is where I recommend for most traders to enter because you want to confirm it. And it's 93 1/4. So no runners on this one. You got an easy scalp, then it pulled back, and what does it do? It takes the break even stops, and then it gives you a second entry long. And generally, I recommend people wait on the second entry. So there was another great entry right there at 94 1/4. Easy scalp, but guess what? This is a trading range. It turns back down. if prices would have broke, I actually had a limit order to go short right here, but it never got filled. Then you got the overlapping bars, a doji, and you know, it's better to wait on a better entry than that. And notice we just got stuck in a little trading range, and even though it came all the way back down, there never was a really good short set up there. You know, not a good trade. But then guess what? It comes down here, and we broke lower here, and then guess what? Then you come back and you bounce right off the support. That's a retest of this support area right across here, and that confirms this is support. So that's a good place to go long. And after that failed breakout, this is really on a bigger picture, a second entry long. And so you need to be thinking a possible measured move. And again, there's that leg. And there's your target right in this area right here on a measured move. It went much higher than that, but then you should have also been thinking about your target of a possible range. And if you looked at it that way, then you should have been looking for your target right in here, and that would have been perfect. It went a little bit higher, but you can see it sold off real quickly. So that was the better target. So you could use either one, you know, and if you don't like, you know, if it doesn't hit your target and you start to get nervous, just close the trade. Just slide your limit order down and take a little better entry and be done with it. But this was a great trade, and guess what? Any runners were safe. You could have ridden this all the way up. I exited my runners right here. There was a chance to add on here, and we also have to consider the short here too. This was really tempting to go short, but notice that's a doji, and you know that's close to being closing on its low. So if you got tricked here, when this reversed, you had to, you know, when that closed right there, you had to reverse right there, or at least exit your trade, because what does that make this? That makes this a breakout pullback long. So, I mean, it was really tempting not to get short right there. But because this was such a bullish move after a failed break lower, you know, that's another clue. Because we failed out the low side, sometimes what will happen is then you fell out the high side. But generally when you fell out one side or the other, it may go further out the other side. And so you had to be aware of that. And so anyway, that's why I marked this one in green, because you know, it starts out looking like a short, but it's obvious that's a reversal bar. So probably a lot of people got trapped there, and you can see how bullish those moves. Once it bounced off this was resistance, and notice now what it is. It's support. And when you see that, that's a good sign, especially when it closed on its high. So you might have gone long. I didn't like going long or short right there. It's just a little risky. And so I didn't re-enter or add on or anything right there. And I didn't take either short or long. And that's why I meant to draw this trend line. So this trend line could have been drawn like that right there. But that's a little steep. I really believe that you know, it's usually your best trends are about a 45-degree angle. So I believe that, and you notice if you draw it right where it touches the first couple of bars, and notice how that one bounces right off of it. That's a good reason to, actually I didn't draw that very good right there. There you go. And now look what happened. We broke lower on a range day. Somebody actually asked me this question today. If you got a trend line on a range day and you get a break of that trend line, do you get a retest? That was the question that was asked. Well, you do, but it's a lot of times it's a different type of retest. It will generally only retest the trend line, or it may just retest the high or the next resistance area, that kind of thing, or support area if it's going the other way. But no, you don't always get a retest of a new high with the two legs, that kind of thing that's real common on a stronger trend. So on a range day, sometimes it'll break and just go on. But usually what will happen when that happens is you get a big overshoot if you can find the channel. And you can tell that's, you know, that's pretty much the channel right there, and we did get a pretty big overshoot, but I still consider that's a retest to kind of come back and try to test the highs and so forth. And this you might have considered going short here, but But I just didn't like this setup because, uh, there's a chance that you could get on up here and test this high or even retest the other high. So I waited on the second entry, and that came right here. There's your chance to go short. It took a minute. You might have got shaken out here, but notice how the trend line is holding these prices, and that's a good sign um, that we are in this range. And you got to think we're probably coming back down here to test this down here. Um, and on a second entry short, that's exactly what it took a minute, but it kind of broke on down. And so you might not have wanted to take this because there isn't a lot of overlap there. But the fact that we had the trend line, we're inside the trend line, and the fact that this is a range day, you got to figure there's a good chance we're coming back down to test this low side again, and that's exactly what happened. And so I took this trade. That's a very bearish bar. I liked it. That's you tried to come up, test that once, and turn down, and then you try to come up and test it again, and close, and then turn down instantly. And so that's your second entry short right there. And you might have been tempted to go short below that bar right there, but it's just too close to these lows. And this one's really close as well, but this is a second entry, and that gives it a little more merit than entering on a first entry this close to these lows. So hopefully that makes sense to you. You didn't get another chance. Now you kind of got this confirmed, and if you drew this and drug it down, you can see it touching the low sides, and we bounced right off that. So now you got it confirmed that, yeah, we definitely got a channel here more than likely. And this was a nice setup. Here's your two matching bars. These work better when they're way away from the EMA for the snapback, but they work just as good if you're willing to take on the extra. These are more aggressive trades. You could just drop a limit order right there, and when it ticks up and touches the EMA and the trend line, then you're hoping you're going to get at least a 4-tick pullback, but that gets you in way up here. But the safer way to take this was wait for this to tick higher and then turn down, because now you got them trapped above a double top. It's just like being trapped below this or above this. It's just on a smaller scale. And so you got them trapped, and when it turns down, it's okay to go short right there. And then look what this is. This is one move up, a pull back, and then a second move up. So that's a two-legged pullback to the EMA, the trend line, off the channel. That's just a perfect setup. And so you go short right there. Easy move down. And actually, this line would have been down here by now. And look where it bounced. And it was really tempting to go short down here, but we were in this channel, and you might have considered this a break, but probably not. You probably need another break since we held right here. But don't lose sight of where this is at. I got an email about this today. This obviously, look how many times prices have touched this and bounced. That's telling you that's important. It did it again here. And even though we broke lower, that's just a failed break lower once again. And where would you expect that failed break to reverse? Down here where the new lows are at, where you get the most touches. And look at that. But what I want to point out to you is don't lose sight of that, because somebody was asking me, hey, do you think we're going to keep going down, or you think if we got a channel, or is this a range day? They weren't quite sure. And what I threw out there, I said, pay attention to this line, because that line is important, and we're gonna have to test that a few more times. And look what happened. We broke below. We tested it from this side. We got above it. We came back and tested it from this side, and it's holding. So this is a second entry long, counting off this low, and that's a nice reversal bar. But notice something else. Notice that little double bottom there. And I showed you a bigger pattern, kind of like that yesterday, and that one tick lower, and then it reverses, closes on its high. You had to go long right there. You got to be figuring we're at least coming back up to test these highs, and we did, and we came, we did, and we broke above those two highs, turned down, but you should have drawn your trend line up through here, just kind of like we did before. And originally I had it drawn just like that, and I think that's probably the way it is. I played around with the line some, but let's move it back to where I had it originally. And you can see that's it right there. And what I did, I just drew it through to where we got the first couple of touches, And that's a nice long. Then we pulled back to it again. And I drew this one in green, and this is why. This is a fairly tight channel right here. You might have even had it like that right there. That probably looks even better, to be honest. But if you wait till up here to go long, you don't have much room. It would have still worked, and most of these trades will. If you would have entered it 95.50, it got just enough ticks, but it got an overshoot, and that's why it got overshoot, because there were, don't ask me why, but I can just tell you that most of these setups will move from the entry point to where they reverse at least enough to get 5 ticks, because you need 5 ticks to get a 4-tick limit order filled in most cases. And it's amazing how many times the market will make that happen for you. But I just don't like that setup, and that's why I drew it in green. It's a breakout pullback long. It's it's a bounce off the trend line, the EMA. It's really a two-legged move. Look here again. Here's your high. You move down to right here. Then you got a pullback, and then you got your second move down, and then it reverses. So this is another two-legged pullback. It's hard to see on this chart, but if you go to a smaller chart, I promise you, you'll see 2 legs easily, and you'll see that this is a second entry long on a smaller chart. So I drew it in green. It's a really aggressive trade for the reasons I just spoke about, but you can't ignore that trade all the same. And then here's you another two-legged pullback, same thing. This one you might have waited till here to enter, and you definitely didn't want to enter here because that's kind of a doji with more of a bearish slant. So I really don't like that bar. You got to wait on a better bar, and by here, and you see that one pulled back. It still went higher and worked, but they pulled back and fooled everybody. But guess what? If you're following the rules, you know there's no trend line break yet. So you got to be thinking with it bouncing off there that it's worth entering. So, now here's where it comes down and it breaks right through, and that's all the pullback you're going to get, obviously. So you got to pay attention to that. But that's a good example of what happens on a range day. Sometimes you get the trend line, you get a trend line break and you don't really get much of a retest. But it's because it's a range day. But going back to this line, and that kind of does it for the trades, but I want to go back to this line right here and talk about it. I told you I got an email about it, and I told the guy, I said, just watch this line because this is important. Whenever you see that many touches and failed breaks, I mean, even though the prices went lower here and went lower here, when you put your lines on there, you see that this is a failed break lower because it quickly snaps back and goes back up to the upper side again. And then suddenly it holds again. So when we come back here, this is going to be an important point again. And when we got below, I said, just watch and wait for it to test this line and see what happens. And of course, when it tested it right here, that was the perfect place for all the reasons we talked about earlier to get long. And guess what? If you got long right here, a runner would have survived because it only pulled back to here. And you could have ridden this from, let's just see what you could have done, from 93.75 to at least where it overshot here. You get almost 3 points out of it. But the better thing to do is ride it until it comes out of this trend line and then exit. I would have exited on this bar right here, so you wouldn't have got a whole lot more. But actually, what I probably would have done, if I'd been smart, I would have waited for the third push up. But you don't always get 3 pushes. But let me show you this. You get 1 push, pull back, second push, pull back, third push. And so you got 3 pushes into that trend channel line. And a lot of times after that, you'll get a reversal or a bigger correction. But what I did was I exited. I think I exited on right here when it broke above the double top. But I might have waited till here. I can't remember. But anyway, generally you want to consider where the resistance is at and look to try to exit around there on a limit order so you can get most of the move. And yeah, actually I exited, went right here. So I exited at this point right here. and that was one tick before it touched that, because I remember I got almost 3 points out of that move, and so I must have exited right here, and I didn't take this trade, so I was done. So that was pretty much it for today that I saw. And again, you know, a lot of people ask me, you know, do you take every trade? Do you, no, I don't always. The idea behind the chart lesson is to show you the setups so you can see them and so that you can learn about them and learn to spot them yourself. If I see the trade and I'm trading, yes, I usually take these trades. But just like everybody else, I miss some. Some I step away from my computer for a little while. Some I'm through trading. So no, I don't always take every trade every day that I show you. So don't get confused on that. Make sure you understand the purpose of the chart lesson. It's not to show you every trade I took or every trade, you know, and to show you how it worked, my trades worked and my trades failed. Because a lot of people say, why you never show failed trades? Well, the idea here is not to show you failed trades. The idea here is to show you the patterns and what works, and so you can learn from it. So make sure you understand that part of the videos, because that does get confusing for some people, and they say, why do you never show a losing trade? And it's not because I don't have losing trades, because I have them. I don't have as many anymore as I used to. Generally, I'm profitable every day for the most part. But, you know, you're going to have losing trades. That's part of trading. So don't think that you're not. But you can get a whole lot better than people will tell you can get, and you can get a whole lot better than you think you can get if you get as many hours doing this as, you know. I mean, we talked about it in the video today, or the interview today. You know, I have thousands of hours of sitting here. I've been doing this for years, just sitting right here all day long. And in the old days, you know, I would start at 7:30 in the morning, and I'd still be either watching my screen or at least studying my charts by 7 that night. And so, you know, I got lots and lots of hours of looking at this thing. So just keep that in mind. It takes a while. It doesn't happen overnight for everybody, and it doesn't happen overnight for most people. Um, uh, so anyway, I'm going to wrap it up. I got to get out of here. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.